Very interesting time in the world right now, particularly with the global markets and a bit of turbulence. To discuss that and the latest Mindful Money survey, Mary Holm is with me. Kia ora.
Kia ora, Jesse.
Nice to see you. Where shall we begin?
Well, with what's been happening in the markets, I was just showing you a graph of the NZX top 50, so the New Zealand share market.
Yeah.
And at the moment, it looks as though it's fully recovered all of the value it dropped when Trump made his big tariff announcement last week. In one day, it's come bouncing back.
It's a very sad habit, but I've got in the habit of checking the S&P 500 when I wake up in the morning to see what's going on in the world.
Jesse, that is a worry.
And I looked at it today and it was up 10%, and I thought, what the heck has happened?
Yes. It's funnily enough, I was just writing my column for the Herald yesterday and saying, it's surprising how many times the biggest gains in a year follow closely on the biggest drops in a year.
I saw that note today as well. I think today's one of the biggest days in history for going up.
Yes, which is in itself a message for people. You mustn't react to these market falls. It's if there are people out there who moved their KiwiSaver fund or sold their shares in the last few days, they're probably going to be feeling pretty sick now. Now, whether the full recovery, which we've just about got on the international, on the US market as well, it's just about back up to where it was before the tariff announcement. Whether it goes all the way back up in the longer term, we don't know. Tariffs are not a good thing for world economies, and so we've got to expect that this in the long run isn't going to be a net plus.
Even if it was just China. I mean, the US versus China, the two biggest economies in the world.
Yes.
With some massive new barriers, has got to have an impact.
It does. It absolutely does.
Intended or otherwise,
but we'll have to just see how this shakes down. And in the meantime, in fact, Pratik just out at the reception was saying, oh God, my KiwiSaver went down, I think he said 13%, which is a lot. And he said, if only I had insider information. And I said, well, there is none really. And he said, well, perhaps within Trump's office, if somebody there knew that he was going to undo what he had said, that would be helpful to know. But I understand the people in the Trump administration are disagreeing with one another anyway about all of this, and so
well, he did actually tweet, or the equivalent of a tweet on Truth Social before he made the announcement, saying it was a great time to buy. Yes. So if that's insider trading, I don't know, but
yes.
Wasn't super secret about it.
No, that's right. So the whole situation, I mean, what New Zealanders should do about it is go to the beach, really. I mean, it's the same. It's always been the advice, hasn't it? And it's really not a good idea to react to what's been going on in the markets. It's
that's something
silly.
You've said many times,
yes.
But it bears repeating, and a lot of people haven't heard that message, right? You don't have to react. You are better not to react to day-to-day news.
It's so different from nearly everything else in life, where it's really good to keep up with what's going on, but really in the share markets and the bond markets have been all over the place too because of these announcements. And so that means that the vast majority of KiwiSaver funds are invested in shares and bonds, or one or the other. Only the very lowest risk ones aren't. And the point is all the KiwiSaver investments and all the other share investments everybody's got, and anything else really, it's very hard to know how it's going to shake down. And anyone who tells you they can work out what's going to happen is not right. So just leave it alone, everybody. I mean, it's going to
make sure you're in the right fund for you.
Yes, and if this is always a good test when markets get this volatile, it's a good test for people to see if they can cope with that volatility. If you are in one of the higher risk KiwiSaver funds and you found, oh my goodness, if you've looked at what's happened, it's best not to look. But if you've looked at what's happened to your account and you're feeling panicky about it, well, maybe that means that you haven't got the temperament for those higher risk funds. But I wouldn't do anything about it right now. I'd hang about and wait for a while and then perhaps gradually move your money down to lower risk funds. But for most people, just try and ignore it.
Yeah, because you'll make more money in the long term if you can deal with that volatility and have the long term in your sights.
Yeah, you just need to look at the data on recently we had the 10-year data on the average returns on the higher risk KiwiSaver funds versus the lower risk KiwiSaver over 10 years. You've got to look at a fairly long period. And it was just, clear that the higher the risk, the higher the average return.
And why 10 years? Because we could have a global financial crisis tomorrow and everything falls apart. But we look at history and say that within 7 to 10 years, things come right and go up again. So
they tend to.
If you can hold on through those periods for long enough, it all kind of evens out and goes in the right direction.
Yeah. So, but if you think you're going to spend your money, whether it be in KiwiSaver or elsewhere, going to spend it within less than 10 years, it's a really good idea to be reducing your risk.
I might throw this question at you that came in earlier.
Sure.
Can you ask Mary if this is a good time with the current economic environment to change KiwiSaver savings from a balanced to an aggressive fund? I'm an older person who plans to keep their money in KiwiSaver for about 10 years. A few mixed ideas there.
So that person's looking at raising their risk, which is a little bit unusual in volatile markets. Most people are looking at reducing their risk.
Yeah.
But if they think that they won't spend it for 10 years, I wouldn't say this is necessarily a good or a bad time to make that move. I mean, if you'd made it a couple of days ago, actually, it might have turned out quite good because that's when the markets were cheap. But they've tended today to go back up to where they were, and so it's not necessarily a particularly good time to move. What I reckon is for most people, psychologically at least, is if you're making a move like that, move maybe about a third of your money now, or perhaps next week when things are settled a bit, and then a third in a month and a third in 2 months, something like that, so you don't end up moving it all at what turns out to be not a great time to move it.
Someone's asking a similar thing on text. Is it good to put more into KiwiSaver while it's low? I guess while the share markets are low, as in, is it the same as buying shares when they're down?
Yeah, it is. Yes, especially if you're in a higher risk KiwiSaver fund, which is basically investing in shares nearly always.
But wouldn't that count as trying to time the market? Maybe?
Yeah, it does. Yes, it does. But it's better to be a contrarian and buy when most people are selling and sell when most people are buying. That's better than going with the herd. But the best of all is not messing around with it at all.
Okay.
And one basic message is just keep on steadily contributing to KiwiSaver or whatever else you're in, because at the moment you're actually, when the markets were down, as of yesterday, you were actually buying bargains. It's a really good idea. You must keep those contributions up.
Thank you. Anything more to say on markets before we move on to Mindful Money?
No, I think we should move on to Mindful Money, actually. Yes, yeah.
So there's a survey from that organisation in collaboration with the Responsible Investment Association Australasia, RIAA.
Yes, and they do regular surveys on what is sort of loosely known as ethical investing. And there were 2 or 3 interesting findings, I thought, from that. One was that 75% of New Zealanders expect their KiwiSaver and other managed funds to invest ethically, and only 5% disagree. So there's another 20% in there who are saying don't know. But that's high. 73/4 of New Zealanders are saying they want KiwiSaver and other managed funds to be invested ethically. A lot of people don't follow up on it, though. I've seen other surveys that say, well, have you actually moved your money to a nicer fund? And a lot of them haven't, but they might. I mean, they're starting to think about it.
And it might impact the behaviour of marketeers within those KiwiSaver fund providers, right? Hey, this is what people want. Let's think about this when we
Yes.
when we do our investments.
But yes, hopefully when we do our investments rather than when we do our marketing.
Yeah, sorry.
Because, no, that's all right. And that was one of the other points that came up, that the increasing concern about greenwashing, which is when a fund or a company says we're doing things environmentally well or socially well, and in fact they're not really. So there's increasing concern that that's happening. But Mindful Money is a really good website as a good source of information on different types of investments, KiwiSaver and other investments, and you can have a look at how well your fund scores and find one that scores better at your risk level. And the interesting thing I thought, a couple of interesting points about this survey, though. One was that when people were asked what investments they wanted to avoid, now 5 or 10 years ago it tended to be weapons, pornography, tobacco, gambling, alcohol, and they are fairly well down on the list now. They're not as big a deal for people anymore. The top one in New Zealand was human rights violations. That was the thing that concerned people most of all, and labour rights abuses. And then third was environmental damage, which has always been an important issue for a lot of people. But funnily enough, the one that people were least concerned about was investing in alcohol. And I think probably quite a lot of people have said, oh, I don't mind if my KiwiSaver fund invests in alcohol companies. It's not as... I don't
think of it
mind
as a sin so much,
no,
do you?
No.
A moral sin. It might not be particularly good for the world, but it's not like...
Well, in some ways, a little bit of wine every now and then might make life nicer for many, not everybody, but many people. But...
A lot of couples would never have got together, Mary, without a little bit of wine.
Quite, yeah. Interesting just too to have a quick look at who was sort of most ethical in the survey, and unsurprisingly, perhaps women came out as more concerned with ethical investing than men. But I was quite surprised at the margin. It was 81% of women versus 67% of men. So we've got 4/5 of women versus only 2/3 of men thinking that way, which is quite a big difference, really. And women were especially concerned about weapons, pornography, genetic engineering and fossil fuels. Those were particular issues for them. And also younger people were more interested in ethical investing than older people, which is perhaps quite encouraging about how we feel about the world. And people with a university education were more inclined to care about how ethical their investing was. Yeah. I could tell you a bit more, but did you have some questions?
No, you go ahead.
Oh, okay. People under 29 particularly concerned about fossil fuel, which is perhaps not surprising and is perhaps a nudge for us older people to say, well, we should be too, because we're leaving this earth in not such a good state as we found it as far as all the climate change stuff goes. And I would submit that we also should be taking an interest in that. The boomers, meanwhile, were back with the old-fashioned issues, the tobacco, adult entertainment and porn, and animal cruelty, which are the sort of longer-term ethical issues, perhaps.
Okay.
Yes.
Thank you.
Yeah.
Interesting stats.
Yeah.
How can you tell, asks someone on text, how can you tell exactly when your KiwiSaver provider will invest your money if you add to your KiwiSaver when the market is down, especially when it's going up and down so rapidly?
What a good question that is. And I don't know. The people that are actively managing, their KiwiSaver funds, as opposed to the ones that are in passive or index funds, and they'll just be, they'll be at the beach with me. But the actively managed ones will be watching closely and saying, oh gosh, should we be moving this? Should we be buying this? Should we be selling that? And they probably react quite quickly to world news. But the trouble is the world news has been going from good to bad to good to bad. And, but by the time the three of them have sat there and thought about what we should be doing, something new will be coming out. I mean, so I simply don't know that, but it is a really good point. If someone's saying, "Oh, well, I'm going to go in and put more into KiwiSaver because the market's down," given what happened today, by the time that actually gets executed, the market might have gone back up again, which is all the more reason not to try and time markets. Actually, just leave it alone. Yeah.
Lloyd was in a medium risk KiwiSaver, is retiring in 3 months, and has seen it lose $5,000 in just over a week. Well, hopefully the last few hours has been better for you, Lloyd.
Yes.
But you would think you'd be a little bit insulated from global shocks in a medium risk, would you, Mary?
Yes. And medium risk one, although given the trouble is both the share and bond markets have been affected by what's been going on this week. And so, but Lloyd, was it? Yeah. Hopefully he's not planning to spend all his money straight away when he retires. Most people are sort of dribbling it out over time. And so that gives you a kind of spread anyway. I would just hang about, Lloyd. Don't rush in and do something radical with your money. If there's some of that money that you are planning to spend right away, and one scenario is people who have got a mortgage who hit 65 and they've still got a mortgage, quite often then they'll cash in their KiwiSaver to pay down the mortgage. And that's a good move. That's a good thing to do. And that does mean that you are selling your KiwiSaver units, in one big block on one day. If you're planning to do something like that, I would have been reducing the KiwiSaver fund risk over, say, when you're 2 or 3 years off doing that, gradually be reducing the risk down so that by the time you're actually spending the money, it's in a low-risk fund.
Do you think it would cheer people up if I reminded them that even these massive, massive falls in the last week, it only really took the share market back to where it was like maybe a year ago? And
it's a really good point.
They've come off years and years of it just going up.
Yes, except for
anyone who's been there in the last 5 years will have done so well.
Yeah, that's a really good point that I had been thinking of making. Yeah, especially all the way through from the global financial crisis in about 2007-09 period. There was huge market gains. We have had swings since then, of course. We had a very dramatic swing down and then back up again when COVID broke out. And since then, the markets have wobbled around a bit. But you're absolutely right. If people are feeling unhappy about the situation now, people have been in KiwiSaver through.
If you put $100 in 5 years ago and now you got $400 instead of $500, it's still not worth.
That's a really good point.
And it's about
a lot better than being in bank term deposits, for example.
Good stuff. Great to see you.
You too, Jesse.
Thank you, Mary Holm, as our personal finance expert.